You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionFit.com.
And welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call around here the old Options Insider Radio Network. Quite a few programs for you guys to sink your teeth into if you're so inclined. And where can you begin that audio adventure? Well, of course, the mothership, the flagship, theoptionsinsider.com. Click on the Insider Radio Network tab, top left corner of the homepage, and bam, you're off to the races. And of course, while you're there, click on some of the articles, some of the stories, read around, check out the breaking news from the options market. A lot of unusual activity. If you like the odd block, check out. We have a lot more on the site throughout the day. So a lot of cool stuff to check out as well. We don't just do radio, folks. We do a lot of other stuff too. It's just we like to do radio as well. And a lot of you guys like it as well. And of course, if you don't want to head there for whatever reason, you want to find it in your provider of choice, head over to iTunes or Stitcher or TuneIn or whichever system you use. Or of course, just grab our mobile app available for iOS, Android, and of course, the ever-expanding Fire OS. And joining me on the old Option Block program today, beaming in from somewhere in the Chicagoland region, we're not sure where, he'll let us know. Is it the World HQ? Is it the Field Museum? Is it perhaps a field in Winnetka? We don't know. Is the Greasy Meatball himself, Mr. Mark Sebastian. Mark, welcome back to the program, and where are you joining us from today?
I'm at my local residency in beautiful Riverside, Illinois. Good to be here, Mark.
We need a where is Mark Sebastian kind of game, kind of book. You have to wear some kind of fun outfit like Waldo, and then we could pick you out of the picture. And that'd be a big hit with our younger listeners, I think.
I think it'd be hilarious. We could turn it into a video game that you would put on a 5x5 disc and insert it into like an IBM compatible.
Yes, right there. It'd be a combo pack with Oregon Trail. It'd be huge, huge hits. We could watch the Greasy Meatball die of dysentery, cross a river. It'd be good stuff. I'd pay for that game, certainly, especially on a floppy. All right. And also joining us from other parts, known far and wide, hailed far and wide indeed, as scenic and lovely St. Charles, Illinois, Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. How are things in your neck of the woods, sir?
Oh, it's always beautiful. Every day's a holiday, every meal's a feast, and I'm happy that I'm not in a field in Winnetka today.
Yes, I think most people generally are. Apologies to our handful of Winnetka listeners
who are against the city, but just glad I'm not in a field there right now because it's not some nice weather today.
Oh, yeah. Well, I wouldn't know because I am still beaming in from our roaming HQ down here in the southern HQ, if you will, down here in scenic and sunny Florida, taking the scenic route for the last few weeks here as we're traveling down south and enjoying ourselves. But you know what? The Options Insider Radio Network marches on and the program marches on. So without further ado, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, and welcome to the Trading Block. This is, of course, the portion of the program where we break down what's moving, what's shaking, What was lighting up our collective tapes today was pretty much sell-off mode across most of the street today. Not as aggressive as we've seen in weeks past. Most of the major indices closing off about half a percentage point or so. I should mention here at the top of the show, we are recording this on Monday, June 15th, for all of you playing the home game. So bear that in mind as you're listening. Of course, all the major indices selling off about 0.5%. The Dow actually leading the charge with the full 0.5 percentage point. S&P and the NASDAQ, bit of a laggard today, only off about 0.4 of a point or so on the day. And as you might expect, VIX cash ticking up a wee bit today, up about a handle and a half or so, trading north of the 15 handle today, trading right around the 15.3 range or so today. Is some of that vol air coming back into the balloon. We were speculating last week, of course, on volatility views, and even on this program towards the end of the week, once the Greek air came out of that volatility balloon, there wasn't a heck of a lot else to really go back in there. A little bit of that Greek vol squeezed back in on Friday, and now we're seeing a little more coming back in today. But it remains to be seen if this is an ongoing thing, or perhaps a momentary blip, a momentary aberration before we head back down south for our typical summer volatility doldrums. Since we're talking the vol doldrums, we'll start with you, Mr. Greasy Meatball. What's your take on what we're seeing today, and what really caught your eye in today's activity?
I thought for a moment there we could really fall off, but we didn't. Now, the markets recovered, but volatility really didn't. We had a pretty nasty move in the VIX this morning. It was a little higher than now, but, what followed through was June all day. June moved so hard. We went from a pretty steep contango, or a pretty steep backwardation, to a pretty steep contango in a single day. So the VIX popped, the futures caught up, the VIX dropped, and the futures themselves kept rallying. It's really pretty interesting the way that stuff is moving. Now June expires in a day, but the futures are pricing themselves like we could keep going, and that there may be some continued fear popping here in the next couple of days. July over 16, so as I look around, I definitely see areas where I think the market is legitimately starting to say, oh, wait a minute, maybe we shouldn't have brought the VIX down to 12.5 on Thursday.
Yeah, a little bit, perhaps a wee bit overdone. The options also speaking a similar story today. VIX options lighten it up. They've been averaging south of 500,000 contracts a day of late, and even that is fairly inflated given some recent volume. If you look a little bit farther back, they were averaging a lot less than that. Today, doing 750,000 contracts, so a light 'em up day out there in VIX options land as well, kind of going hand in glove with the movement we saw out there in the futures, about a little over 3-to-1 calls over puts, typical VIX volume. That's what you usually see out there, regardless of the movement, calls outweighing puts, but today even stronger than you might anticipate. So yeah, a lot of action out there as well. Uncle Mike, in addition to all this movement and all things volatility, what caught your eye out there in today's market activity?
Yeah, I think Mark brings up a good point. We had quite the sell-off right at the open this morning, and then right around 10 o'clock Chicago time, the S&P kind of came back a little bit and just kind of channeled the rest of the day. But Mark makes a good point in that the VIX never really did that. It just kind of opened higher and just kind of channeled throughout the day. The other thing with which I noticed is that we had quite the rally in TLT early today, and then it came back down. When I say early, I mean pre-market. We gapped up, and then for the most part throughout the day it came down. I think that Greece obviously plays a big part in everything that's going on, but even though I would bet dollars to donuts that we're not going to get a rate increase this week, the Fed is still speaking, so you never know. That could also be contributing to some of the increased vol that's coming into the market this week.
Yeah, it'd be interesting to see what kind of paper flow we see going into that event. But yeah, I think I'm leaning with you. I think the vast majority of sane individuals are leaning with you, Uncle Mike. That doesn't really seem very likely that we see some sort of drastic action by the Fed this week. Still, yeah, I wouldn't be surprised. I would be surprised, I should say, if we did see a lot of paper flow going in ahead of this event. But you never know. We have seen crazier things. But yeah, I think most sane individuals have already pushed them past the SEP, perhaps even past the DECE into 2016 at this point. In terms of, certainly, if they listen to the International Monetary Fund, and I believe the World Bank also joined that chorus last week as well, kind of announcing to the Fed that they shouldn't do anything. If they do anything this year, then they are reckless, or insert your adjective of choice therein. Still, it's been interesting to watch the different international bodies kind of wag their fingers at the Fed and say, no, 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 don't do anything, at least not this year. Aside from that, looking around the rest of the market, there wasn't a lot of other stories really lighting it up today. There was some activity out there with CVS and Target. They were acquiring each other's different pharmaceutical. I believe CVS actually buying Target's pharmacies for a change, but that didn't really translate into a lot of options action. Same thing with the lumber liquidators, some movement out there. That one's been a frequent offender in our unusual activity of late, but not really lighting it up today either from an overall options activity standpoint as well. I know a few people were out there watching the big electronic entertainment expo out there in LA this week, hoping that would maybe have some resultant movements so far in names like Microsoft and Sony, and yet we haven't really seen. In fact, Microsoft actually selling off, outpacing the market to the downside, off about 1% today. I guess the news out of LA not exactly buoying investors' hopes out there, but not a lot coming out of that area really as well. So far today, it was a relatively quiet day. One thing did catch my eye, Mark. I was looking at some different write-ups today in the marketplace, and one of them I noticed, I believe it was over there in Hedge Week, yes, and they were talking to one of our buddies over there at the CBOE, and they were talking about expanded VIX hours and all the things that we've talked about many times on this program and others on the network. But one thing caught my eye. They did ask them about the possibility of dailies in the VIX and in SPX. This is, of course, kind of a hot button issue. It's been bandied about. I myself have asked this question a number of times to different heads of exchanges over the past year or two to kind of gauge their sentiment, gauge their reaction. And typically it's a stark no. This time it seems like the no was a little bit more tepid coming out of the CBOE. Granted, it wasn't the head of the CBOE, so you know how these things can filter down sometimes, but still interesting stuff to see that perhaps we may actually start to see more impetus for, particularly, I guess we'll have to wait and see how the VIX weeklies perform first, but if those go well, perhaps that notion of a strip of daily contracts, so not something where they just list something and it goes away 24 hours later, but a full strip. Is that something that intrigues you at all, Mark? I think we'll be seeing that anytime in the near future, or is that kind of a distant pipe dream?
Yeah, I don't see how that trades. I think weeklies will have some value. I don't think dailies are something that'll ever happen. You could maybe do a binary option on it or something like that, but that would be about all. Actually, Mark, I found out some interesting stuff about what's going on in the VIX pit. I don't know if we talked about this, but did you know that CBOE's doing away with the DPM in the VIX pit and dropping customer priority?
I did not know they were doing away with the DPM. No, I hadn't heard that. I knew
So I'm hearing, I don't know if this is official, they're doing away with the DPM. They're dropping customer priority. I guess there was a serious issue with upstairs market-making firms marking all of their markets customer and getting out in front of things, or like electronically. So they're dropping customer priority, and I'm hearing they're going to drop the DPM.
Well, the customer priority thing doesn't really come as too much of a surprise. We've seen similar moves from other exchanges like ISE and others recently, kind of going you can call it the professional customer route. Sounds like maybe CBOE taking a similar tack. I'll have to look it up and see exactly what they're doing for myself. But, you understand this, Mark, and I certainly, when you were down there, you saw these guys essentially getting picked off left, right, and center by what were effectively professional customers. And so there certainly was a mindset amongst professionals for a long time that customer distinction was a little bit too broad and it really needed to be narrowed down. Of course, the exchanges and others frequently push back on that, saying, yeah, well, we don't want to strip that kind of priority from people because that'll hurt the business, it'll hurt our volume, certainly, et cetera, et cetera. So there was a bit of push and pull. Some exchanges have acceded to that in recent years, like I mentioned, the ISE and others now having this professional customer designation. Interesting to see CBOE perhaps jumping on board that train as well.
It sounds like they're dropping the whole 9 yards.
That would certainly be interesting. I mean, that would kind of speak to the evolution. I think everyone who's been down the CBOE in recent years has seen for themselves the pit, the floor. I really should say, not perhaps the the place of vibrant tenacity and action that it once was. It's kind of limited now to a handful of spots, the VIX pit being one of them, SPX clearly another, and a few others. But once you get beyond that little corner of the floor, I've walked through my old spots like the Intel, DPM, and others, and those are not even, are they not trading anymore? They're completely dismantled. There is nothing there.
No, there's one guy, Apple, there's one guy that actually sits there. It's amazing.
Yeah, it's the one guy who waits for the one walk in a week.
Yeah, exactly.
So it is kind of disheartening to see that, and I know they're using the floor now for more things like office space. I know it's a big debate over at CME as well, what they're going to do with a lot of those futures pits floors that are essentially going to be laying fallow very soon as well, and how they're going to transform those. So there's a big change coming, certainly in the Chicago area in this space. Sounds like perhaps the VIX pit is the latest to see. That will be interesting to see how that professional customer designation, if that's what indeed what they're doing, if that does impact it, because I imagine the lion's share of that paper are indeed professional customers. So you could argue, why should they have priority?
Well, and right, no, I agree there 100%. The part that was surprising me was that they're getting rid of the DPM. I think that's kind of a more interesting twist. I guess they're going more for the SPX model than the old hybrid model.
So they'll kind of have an opening rotation. They'll let one firm kind of maybe run the auto quote on a different day and kind of rotate it the way they used to do in the S.
That's my best guess. I don't know specifically, but it sounds like Group 1's kind of getting screwed in the deal.
Yeah, well, that's your old stomping grounds, I believe. So you would know better than most what's cooking up. But you're right, that has been kind of their domain for the last better part of the last decade.
Dom Salvino, like the head of DPM, basically helped the CBOE write the VIX program and how they were going to do things. Was heavily involved in actually the creation of that product, and how pricing would work, and has done a marvelous job of managing the book. So I'm like I said, I was a little surprised they went that route, but who knows? They got rid of the super pit as well. They moved that into the Rite.
Really?
Yeah, I mean, they're really consolidating.
Yeah, I guess they need more office space down there. I don't know. That sounds odd.
No, there's plenty of empty booths already.
Yeah, they could expand into the old equity lands, and they could do fairly well.
What it is? I think they can put fewer. I think it lets them get rid of some floor operations people. So like they can play fewer people to sit there and make sure all the orders are.
I suppose that makes sense from a logistical perspective then. But yeah, it is kind of weird to see VIX, because VIX seemed to be a product that was kind of uniquely suited to a DPM structure. SPX, they have a pick committee. They have other things out there that kind of run that. It's a little bit different. I know this is inside baseball a bit, listeners, but VIX seemed kind of suited to that model. And you're right, they have trumpeted Dominic out there in the past at various conferences as having been very involved in the modern iteration of the VIX. So they give a lot of credit to those guys, and it's kind of interesting that they would move away from that. I haven't seen that news. I'll have to dive into it myself to see more, but it is kind of interesting. Maybe perhaps speaks to the evolution of the product.
It was the first I'd heard of it, and I'm a little surprised.
Because as I'm sure you're aware, and listeners may not be if they're not that familiar with the history of the volatility space, but in the early days when they were considering VIX as a tradable product, when it went from this kind of abstract theoretical index to an actual future and option, no market making firm wanted to touch that thing, because the notion on the street was, you're going to be providing the hedge for every other market making firm out there. Why would you want to be that guy? You don't want to write off everyone's vol risk. You don't want to be the guy offering that hedge, because you don't have those pockets. And so there were not many firms willing to step into that fray. Group 1 obviously being one of the few that did. And so now it's kind of interesting.
The other group that wanted to do was Susquehanna, but they were already the lead market maker in the futures at the time. So it was anyway. I just have to say I was a little bit floored this morning that was the way everything went out.
Pun intended, I'm sure.
Yeah, exactly.
Well, on that inside baseball note, listeners, we'll have to dive into that a little bit more. But it is interesting, and I know a lot of you guys, as you become more sophisticated in the realm of options and start to realize how these products trade, these kind of behind-the-scenes developments do impact you quite a bit. So it's certainly something worthy of interest, worthy of consideration. Speaking of things that are worthy of consideration, certainly worthy of interest, it's time for us to change our hats into our detective hats, because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
And welcome back to the Odd Block. This is indeed the portion of the show where we break down the weird, the wild, the wondrous, sometimes just downright whimsical paper that is lighting up the old options market today. Going to kick things off in a realm we've visited a few times here over the past year, and it's coming back up on our radar again. This is the S&P Homebuilders Spider ETF, ticker symbol XHB, closing today pretty much unched right around 36.40 or so. So it wasn't the underlying movement so much that drove a lot of the paper as much as some other big developments therein. This is a product that does about 5,500 contracts a day, doing 13,400 today. And to find where the lion's share of that activity went up, I'll give you a hint, listeners. It was 17-1 puts over calls out there, so that'll tell you where the lion's share of the love lay today in XHB. And then to find the precise trade, you got to scroll all the way out to September. In particular, the SEP, there they are, leaping off the page at me, listeners, as I'm sure they will you as well when you look it up. The SEP 34 puts going up for some size. We started off profiling these with, yes, about a 10,000 lot going up in one block. So very, very large size for 54 cents. Looks like about paper buy-in. As the day went on, we did see a couple thousand more to the tune of 12,000 of these puts going up. Remember, I said the total volume on the day, 13,400. So only 1,400 other contracts total going up in this name today. It was all these puts. That's on open interest of just 900 contracts. So clearly opening paper. The early kind went up for 54 cents. The latter portion went up for similar prices. We did also note that there was some stock going up, at least with that first block, about a quarter of a million shares or so going up for right around the 36.5 range as well. So it looks like our old delta neutral puts and stock going up simultaneously. Again, I believe we were jokingly referring to these on last week's show as the return of the delta neutralers. I guess we got a few more flowing in today. Mr. Sebastian, what's your take here on our friend? Couldn't get enough puts and stock out here in XHB today.
Well, there was that merger today, and this might have something to do with that. Maybe he kind of sees consolidation in the whole space, which would be good for him. Just kind of your standard synthetic call. September's a good time frame to have that trade on. And he probably wants to get the dividend that pays out next week and is a massive 4+ cents.
Yeah, gotta get that 4 cents. In these markets, Mark, 4 cents is nothing to sneeze
huge.
at.
Huge.
That's good money, sir. So yeah, XHB once again catching our eye. Somehow I have a feeling that we'll be checking in with that one again sometime in the near future. Seems like the home builders realm is just a hot area these days, and certainly worthy of note. Speaking of names we've talked about before, we've been all over the iShares MSCI various international products. Today our stop is going to be over there in the iShares MSCI Germany ETF, ticker symbol EWG. This one closing today $28.80, off about 40 odd cents, or a little over about 1.5% on the day. This is the name that does about 6,500 contracts, doing a little over 2x that today, doing 14,600. And it wouldn't be the odd block without some near-term upside call love, and that's pretty much what we saw over here in EWG, but it was for some decent size, at least for this name. We started noticing the June calls lighting it up, in particular the June 29 calls getting a lot of love with a 2,000 lot going up, paper buying for prices between 25 and 30 cents. They went up in 2 blocks over there on our friends on the ARCA. And then, of course, as the day progressed, quite a few more of the June 30s. Lighting it up, in particular 7,400 as the day wound to a close here, going up for a variety of cheapy prices, a nickel to a dime. Looks like the 29s up here, let's see, the open interest on the 29s was 900 and change, so that's clearly opening paper. The open interest on the 30s a little bit higher, about 8,500, so it looks like perhaps our friend or friends are coming in to close on the old 30s and perhaps coming in to scoop for a quick pop here, a very, very quick pop. These calls are going away pretty soon. On the June 29s, those are buy-in to open and looking for perhaps a little bit of a spike here in the next couple of weeks here in EWG. No stock that we saw going up with these, so weren't any delta neutralers lurking out here, at least that we saw. We did, this one sounds familiar, like I said, we have been floating all over these various iShares International ETFs. We did highlight a put seller out here just not that long ago, back on June 11th. So people have been active out here in good old MSCI, and with the put seller and now today's call buyer is extraordinaire. Seems like the sentiment, at least in the near term, is to the north. Mr. Sebastian, Mr. Greasy Meatball, the manager of the Mini Metals, what's your take here on our friends getting all the upside they can get out here in EWG?
Yeah, I mean, it does look like a close. This is probably a covered writer. Taking the opportunity to get out of the spread on the relatively cheap with the DAX selling out. It makes total sense to me. This looks like it was probably open. This might have been open, last month sometime. My guess is he's going to open up a similar trade in July sometime, probably waiting for a Greek deal before he sells.
Yeah, the buying to close is clearly something we've seen many times. The guy did it right on him. He's buying them back for a nickel to a dime, so he's pretty happy with those. I can't recall. I'm trying to think another time where we saw someone, if this is indeed related paper, and it certainly seems to be, someone then also coming in, not just closing their initial shorts, but then loading up on some extra longs just in case. That's kind of an interesting combo.
Like I said, maybe he's playing a bounce.
Seems to be. I would think that that's what he's up to in this very near term. And not only is he taking things off, so he's got a very much a reversal of direction, reversal of position on here.
I think the Greeks are going to get a deal done.
Yes, that would certainly seem to be the case, and pretty quickly.
That's why he would do that trade.
So he had his covered call on. It did all right. It worked for him. Took it off, and now he's like, I'm back. I got my stock. Probably he didn't put any stock up today, but he probably was a covered call. And then he's gonna. I'm looking for a little bit extra bounce. So we're gonna go just dive in, take my money on the covered calls, and put it to work, buying a few thousand of these 29s. Interesting stuff. Again, we don't see a lot of that sudden reversal of position like that. So interesting stuff. We'll keep an eye on those ones as well. See if that sudden reversal plays out in his favor, listeners, as we move on to our final name, our final victim of the day here. This is a name that's been doing well of late. If you've been following the domestic news here in the States, it hasn't exactly been a tranquil period for law enforcement, I think, to put it mildly. And so names that tend to benefit from that type of environment, like TASER, have been doing fairly well. TASER's kind of been on the roll of late. It was trading as low as 22 back in March, and now, of course, closing today up another buck or nearly a buck to right off $35 here. So this name has been on a tear of late. Certainly the turmoil, not exactly bad news for the folks at TASER. Today's volume, decent. This is a name that hovers around 6,000 contracts a day, doing about 7,300 today. So strong, but not overly so. It wasn't so much the volume as the individual trade that caught our eye out here. In particular, it was a little bit longer term and a little bit of a roll. We talked about someone taking off and then reversing before. Now we have someone who's been riding the TASR train up and is looking pretty happy at it, and now is deciding to take some money off the table and then keep the party going. Because why would you want to shut down a party like this? In particular, our friend out here looking at the Jan 44.48 call spread going up as we marked it this morning about 4,000 times, just a hair under for 75 cents, going up in 2 blocks on the CBOE. Again, this is a moment where TASR flirting with 1-year highs, and our friend saying, yeah, I've done pretty well on these calls so far, and I'm going to give myself a little bit of room to the upside. I'm going to take these calls off. So taking off the 44s and saying, yeah, let's move them up to the 48s. Open interest on the 44s, 4,022. Open interest on the 48s, 38. Isn't interesting? Usually someone in this position might wait a little bit longer because these calls have done all right, and they obviously have a lot more time to go to let them move a little bit more in his favor. But our friend here deciding, yeah, you know what? I'm going to take what I've made and put that to keep some of it. He's not keeping all of it, obviously. Only about 75 cents worth here that he's actually putting the trade on for, but putting the rest to work on a substantially higher strike. So our friend here maintaining his very, very bullish outlook on TASR, but also taking a little bit of money off the table. Again, didn't see any stock going up with this one. So it appears to be, as it looks on the surface, your straight up call, vertical roll, no up and out, just straight up. Mr. Sebastian, take us home here with our friend playing with a little bit of house money in TASR and probably got a big smile on his face to boot.
Yeah, I mean, that's exactly right. It was kind of an odd one. You wouldn't expect somebody to be to be going that wide out, but that's absolutely what happened. I mean, he's really rolling that thing higher, and hey, you know, he must really think TASR's going to do well. I mean, that's the only reason why you do that trade.
Yeah, he's clearly, I mean, sometimes people will come in and close out, like we saw our other friend doing, and sometimes they will reestablish. Our other friend flipping the script completely, buying some closer to the money calls. Our friend here deciding to close out and then just reestablish farther north. He needs a 14 handle or so move for those to at least.
That's an impressive trade.
Yes, that would be a pretty good run for TASR. So clearly, our friend thinking the upside is not done here in a TASR. But of course, things that are done, with the odd block is done. Unfortunately, I know a lot of you guys love it. If you do love the odd block, we do have a lot more in store for you. Of course, surf on over to the website, theoptionsinsider.com. Read all the detail on the alerts we don't have time to get to. And of course, if you're a TD client, surf on over to the TD Ameritrade platform and check out our Options Oddities program every day, noon Central, 1 p.m. Eastern, where we do exactly what we just did, but in a lot more detail for a full half an hour. So you can check that out. And of course, you can check out the broadcast there on the network as well to search for Options Oddities wherever you find your favorite Options Insider programs. But now it's time for us to keep on rolling right on into the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. This is indeed the portion of the program. You know, once a week we like to let Uncle Mike out from his cell, out from his cage, and grab his stone tablets and his bubble pipe and perhaps a smoking jacket if he's feeling up for it, to dispense a little bit of options wit and, if we're lucky, some wisdom as well, listeners. So, Uncle Mike, what do you have in store for us today, sir? The floor is yours.
We are hedging bond portfolios today, Mark.
Wow. Let me buckle in. Let me strap in, sir. This is going to be good.
You know, it's funny. Recently, I was just doing an annual review with a client, and normally with a lot of the annual reviews with which I do, I'll spend a lot of time talking about maybe various stocks or maybe what's going on in the marketplace and the stock marketplace. But it was funny, just a few weeks ago when I did this review, I spent a vast majority of the time talking about interest rates. I've never felt so much more like Alex Jacobson in my entire life.
He is rubbing off on you in many, many dark and mysterious ways.
It is. It's a scary thing. But the reason for that is that we're in a very unique environment, and the bond world right now, and that when is the Fed going to raise rates? That's just the most over talked about thing in existence right now in the financial world. So, with that in mind, everyone has, I shouldn't say everyone, but a lot of people have various portfolio allocations, whether it's 50% stocks, 50% bonds, or 60-40, or have some in commodities, whatever the case may be. But there's traditional financial advisors and most people in general have some type of exposure to the fixed income world. So the question that oftentimes comes up these days is, should I just buy long-term bonds and just hold them for a longer period of time, or a longer-term bond fund? Should I just buy short-term bonds and then just ride out this interest rate scare, whatever it may be, and then once rates come up a little bit, I can get those same bonds back at the same price that I got into them at and ladder them out? Or what do you do in an environment like this, and how are ways with which you hedge it? Well, for the most part, what I'm doing at this stage, I have some clients with which I'm hedging their bond portfolios, long term, short term, whatever the case may be, with this TLT strategy with which I spoke about on the show last week. And I'm also doing this for some clients with which we're just straight short bonds right now, meaning that if we want to have exposure to bonds from the aspect of being short, that's what we're doing, because sometimes certain clients will have assets in other spots, or various reasons with which we're not managing their bonds. So what I want to emphasize is that hedging bonds is very similar to hedging stocks. But now, what actually are you hedging? Let's say, for example, that someone has municipal bonds in the state of Wyoming. I don't know if they have municipal bonds there, quite honestly, but let's just say in theory they do. I don't have any clients in Wyoming, so that's why I'm kind of using that. Which, by the way, if you do live in Wyoming, I would love to have you as a client.
I promise you they have municipal bonds in Wyoming.
You promise me?
Guarantee it. I
All
promise.
right. All right. Well, and if you are a listener from Wyoming, I would love to be your financial advisor, because that is one of 4 states with which I have not yet visited, but have always wanted to. But anyway, let's say that you have a portfolio full of municipal bonds in Wyoming. Now, I know nothing about the state of Wyoming in terms of their municipal bond risk or anything like that, but let's just assume it's a very safe state. Let's say it's basically the polar opposite of the state with which we live in, the state of Illinois, with which I would not touch a municipal bond with unless I was purposely trying to make a client go bankrupt. I would not touch a municipal bond in the state of Illinois. So with that in mind, if you have municipal bonds in the state of Wyoming, there is no exchange that I'm aware of, and I'm willing to make a pretty sizable wager that doesn't exist. There is no exchange that trades options on municipal bonds in the state of Wyoming. So let's say that you do go and buy some puts on a TLT, which is which is kind of how I described what I'm doing with a lot of clients last week. Let's say that you're doing that. You're not hedging the principal risk of the state of Wyoming. So let's say the state of Wyoming goes belly up, then those puts on TLT will do you absolutely no good. However, what you're hedging against is interest rate risk. So let's say that you are buying 20 and 30-year bonds on your municipal bonds in the state of Wyoming. And let's say that we do have a fast increase in interest rates. All of a sudden, the rate right now, it's between 0 and 25 basis points. If the Fed rate goes from there all the way up to 4 and 5%, well, if that's the case, then bonds are going to go down very fast, because of the fact that that's just how bonds work. They have an inverse relationship to interest rates. And those municipal bonds that you have in the state of Wyoming might have no risk from the standpoint of the state of Wyoming or the municipalities within the state of Wyoming going bankrupt. However, the value of your bonds will likely go down because of the fact that interest rates have gone up. So with that in mind, there's 2 risks that exist when you own a bond. You have risk of default and you have interest rate risk. So you're not really able to hedge against risk of default unless, let's say, maybe you bought a basket full of bonds, or maybe you're doing something like with LQD, the ETF, ETF that trades for corporate bonds. And you maybe bought some puts on that, which the liquidity on that is slim and very it's not very good in terms of the options. But in reality, what you can protect yourself against is interest rate risk. And if you're concerned with rising rates, but you're not quite ready to just be short bonds, so to speak, you still want to be in bonds, you have a choice and you have the ability with which to hedge yourself, either with using options on TLT. I wouldn't recommend IEF or SHY. Those are the shorter term ETFs that track interest rates, or I should say the U.S. government treasuries. Or you can use futures options. You can do the 10-year note, you can do the 30-year. There's a variety of ways with which to do so. In terms of the default risk that exists on certain bonds, one thing with which you need to keep in mind is that I believe it's 1 in every 1,000, you have less than a 1/1000th of a percent chance of a municipal bond defaulting. Meaning, and if it has an investment grade rating or greater. I forget what the exact statistic is, but it's very unlikely that a municipality will go bankrupt. It does happen. Just ask some people in Orange County from a few years back. It does happen, but the odds are against it happening. With that in mind, make sure that you have an understanding of what you're actually getting into and have an exit plan before you get into it. So, with that being said, that concludes the Wyoming Municipal Bond Hedging Hour for today.
The annual or semi-annual check-in on the Wyoming municipal bond market that we are known for here on the program, known far and wide. But, jokes aside, this is becoming more of a area of concern and interest for a lot of our listeners. We had some of those epic questions people wrote in a few months ago about how to hedge their bond portfolio. So this is on the minds of more of our listeners, Uncle Mike. So perhaps that's something we should keep in mind going forward, perhaps lean a little bit more towards some of the options use cases in and around fixed income and hedging against rates and things like that, because we joke about it, but not the sexiest thing in the world, but it is indeed a very, very useful thing to at least be conversant on, particularly in times like these when rates are potentially in flux or are going to be in flux potentially in the near term. All right, thank you for that, Uncle Mike. And of course, it's Monday. That means it's time for a mystery. So without further ado, we toss it over to the greasy meatball himself for our regular mystery block.
So today I want to talk about crisis management. And, crises come in all shapes and forms. And, a crisis that caught my eye recently took place in the former Russian Republic of Georgia. I don't know if you guys had heard about this, but there was a serious flood, a flash flood that took place in Georgia. And with that, it flooded out the zoo cages so much that lions, tigers, hippos, bears were able to escape their cages. At one point in time, there was close to a dozen tigers.
You beat me to it, Mike.
Tigers, lions, and hippos roaming the Georgian capital. And, what's been interesting has been to watch how they've managed to, one, round up the animals. It's been a combination of the police force having to get creative, because obviously some of these species are endangered. You don't just go around shooting a lion because you didn't build your zoo well enough. And you don't go around killing hippos because hippos are endangered. So there's all sorts of problems in managing this crisis. It's not like, a deer or, some dime a dozen animal. These are tigers, which are highly endangered. So, a couple of things come to mind in this whole crisis. One, this is a zoo. What is the first and most important rule of zoo making?
To sell awesome T-shirts and popcorn.
Well, there's that. But I believe the first one is to keep the animals in the cage.
Build a good cage. That probably would be rule number one.
Right? Clearly, this zoo failed. The second part has been to create a system where if an animal does get out, there's ways to management. And the third is if all else fails, have a true backup plan. And these guys apparently had none of those three requirements. Some terrible things have happened. Civilians, zookeepers. In an interesting twist, 2 weeks ago, a zookeeper had part of its arm bitten off. He was just back at work when the same tigers that had bitten off his arm escaped from the zoo and mauled him. And
I don't mean to laugh, but it's like a bad SNL skit.
No, this has been terrible. And so I think the interesting point is, a lot of us sit around on our pedestals thinking, one, look how great we are, look at how smart a trader we are, look at this awesome system I've built, without really thinking everything through and not really understanding that there can be floods so deep and so rapid that they allow our position to escape from us. So, what I would invite readers to do is and listeners, obviously, if you're reading this, impressive. But it is, one, examine your cage. That's your trade. Two, examine your flood plan. What do you do if the trade gets away from you? And then finally, what is your true crisis plan? And if you can't answer those three succinctly and quickly, all that's going to happen to you is you're going to end up having a hippo roaming the streets of your capital. Nobody wants that.
I can see why flood planning would be near and dear to your heart, having reestablished the HQ out there in Riverside, known for a wee bit of flooding in its day.
Indeed.
But I do like the analogy of getting your arm bitten off and then getting horribly mauled, because that is very much kind of like what happens to a lot of our listeners who start writing some puts and maybe they get a little bit burned, but they go back to the well and then they get horribly mauled by some bad put right.
Yeah, and the other thing is, you get your arm bitten off, then you think, well, it can't happen again. What people fail to realize is that the old random walk theory, it's not really yes, it's random, but you can have multiple terrible things going on all at the same time and back to back before the random walk takes you through a very, very slow period of time. So, you can get bit and then get mauled. It's just the way it is. And people don't think about that. They think, well, I just lost money, so odds are that I won't lose money again. It doesn't quite work that way.
Yes, unfortunately, in trading, you can lose your arm multiple times, not just once, as you can in real life. So bear that in mind. An excellent, if somewhat disturbing, mystery block, which is what we've come to expect from you, Mr. Sebastian. And now it's time for us to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, and welcome to Around the Block. This is indeed the portion of the show where we tell you what we're keeping an eye on for the rest of the week, and it seems to be a few things really on everyone's radar this week. We, of course, have continued the Greek refrain, and that seems to be top of mind from an international and from a volatility perspective, but don't forget the seemingly discounted, but still potential for possibility with the Fed this week as well. You throw those two into the cauldron and stir them up, and you have a bit of a heady brew to keep an eye on for the rest of this week. May have some interesting ramifications, particularly in these somewhat thin markets. We may have a little bit of movement ahead of us, or we could just go right through the meeting this week and then the announcement this week, and then pretty much have nothing to keep an eye on. So hopefully a little bit of the former to keep us all engrossed. Uncle Mike, what aside from, of course, the Fed and our friends over there with their tasty, delicious gyros are you keeping an eye on?
Well, with that in mind, I got to give a shout out to Westside Gyros in Aurora, Illinois. Very, very proud of that place. Spent a lot of time there. My picture was up on the wall there when I was in my football playing days, and they didn't even put pictures up on the wall of people there for eating a lot. They just put my picture up on the wall there because I frequented the place that much.
I was going to say, it wasn't because you ate 100 gyros in a row or something like that?
No, it was just because I was that good of a customer.
Because that would be impressive. 100 euros, I'd put your picture on my wall for that.
No, I probably ate way more than that, but it wasn't at one sitting. But anyway, on that note, and also besides watching the Blackhawks hopefully clinch the Stanley Cup tonight, I think that's pretty much it that's on my radar right now is the Fed and Greece. In terms of the numbers, we're pretty off of our new all-time highs, but nonetheless, I think that along with those two things, the only other thing that I'm watching right now would be the bonds. Bonds are something that I have never spent more time on in my entire career than I have in recent times. But it's a very important time. We're at a very pivotal time. So I would encourage all of our listeners to pay close attention to interest rates because they do have a very profound effect on what's going to be happening.
You have to change your nickname from Uncle Mike to Macro Mike.
I'll change back to something else soon. Don't worry.
All right. And Mr. Greasy Meatball, aside from some tiger maulings, what else is top of mind for you the rest of this week, sir?
We've got Greece. The Federal Reserve is going to be coming up here shortly. And, I'll be interested to see whether we get something done. I feel like if we don't get something done over the weekend, next Monday could be a little bit ugly.
Yeah, it seemed like people were discounting it a lot last week, and then Friday we had that bit of a hiccup, and all of a sudden a little bit, like I said at the top of the show, a little bit of vol came creeping back into the market, more of that vol creeping back in today. You're right, but it seems like people are saying something's got to get done pretty soon, and if it doesn't, then it might be interesting things to watch. We'll, of course, table that for our show later this week, and indeed Volatility Views, because now it's time for us to wrap up. But before we go, as always, let me check back in with my cohorts here, see what they have cooking up that may interest you. Starting off with you, Macro Mike, what is lurking in your realm of supply and demand curves, sir?
Well, plenty of supply and plenty of demand as always. But what we're looking at right now is if you are a self-directed trader trading your own account and would like to participate in the RCM world, meaning at RCM we get a pretty well discounted commission rate because of the fact that we have well over $100 million under management. Feel free to give me a call or send me an email. And we can see if this is something with which we could work with you, and you could just kind of trade through our branch, for lack of a better term, through either TD Ameritrade and or Interactive Brokers. If that's something with which it interests you, feel free to send me an email at mtusaw@rcmfs.com or give me a call at 312-212-3531. And I just had a talk with a gentleman today from a trading group. If you're part of a trading group, give me a call as well. We can set up some type of a discount for you, possibly on our annual fees.
There you go. And I'm looking forward to your upcoming webinar on the Phillips curve, sir. Good stuff.
Very good.
All right. And last but certainly not least, Mr. Meatball, in addition to your new career as a zoo cage consultant, what else is cooking in your neck of the woods?
Nothing. Just hanging out, read our blog, and and enjoy that. Every Friday I've been posting a little video of kind of a weekend trade idea. And for the most part, they've been pretty successful. Obviously, just an educational video, but if you're going to catch out one blog a week from Option Pit, check out that Friday video.
And you guys just did your big boot camp. If listeners missed that, is there a place they can go to get the archives or get the after the fact stuff?
If you go to optionpit.com/bootcamp, you can buy the boot camp and watch the replays.
And you won't get Mark in his fancy drill instructor outfit, but everything else should be pretty much the same, correct?
Indeed.
All right, check that out over there, optionpit.com, to learn more, listeners. And don't forget to give Macro Mike a call. His Phillips Curve webinar, cutting edge stuff. I wept. It was really good stuff. All right, and on behalf of Uncle Mike and the Greasy Meatball, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions. We'll get to them on Thursday, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.